Hello everyone, good morning, good afternoon everyone. How trading tips? Okay. When I was in the beginning trading at the time I faced a lot of difficulties. So today I am a full day trader. So I'm going to share my experience, what I had and what I have. Today I am going to share some tips for beginners to how to trade. And starting, before starting, what you should need to know, what you need to know, right? What you have to understand. Okay, I am going to talk about that, and I'm going to give some tips for the beginner. Okay, first of all, without further ado, I'm going to start the topics. Okay, I'm today first I'm going to talk about technical analysis. Before you start trading, you have to know, you have to be master in technical analysis. Okay, so what is technical analysis? In finance, technical analysis is an analysis methodology for forecasting the direction of price through the study of past market data, primarily price and volume, behavioral economics, and quantitative. Okay, so what methods of technical analysis of stock? Okay, what you should need to know, what you should know, right? You should know stock charts. Before starting trading, you should know stock charts. Okay, what is stock charts, what types of stock charts, and how the stock charts works, how the stock charts give you the, how the stock charts help you to understand more about the pricing, right? And moving average, you should need to know the moving average. Okay, and technical indicators. Okay, technical indicators also help you to understand about the pricing, about the market. Okay, and momentum indicators. Okay, and price indicators, support and resistance. And I would like to talk more about support and resistance. If you don't know about support and resistance, don't trade it. First of all, you have to understand about the support and resistance. Okay, how it works and how to create, how to understand the support and resistance. Okay, if you know it, that's the good thing. And if you don't know, please, before trading, you have to understand about the support and resistance. And stock volume. Okay, that stock, how many people are trading in the world, right? If there is a more volume, that means more opportunity to grow, right? Growth, right? But if less volume, that means there's a less opportunity. Okay, and trends, right? You should know about trends, types of trends, and how it works, right? You have to understand about trends as well. Okay, okay, so today I'm going to give you about stock charts. Okay, let's talk about stock charts. What is stock charts? Okay, the definition is stock charts are the visual representations of a stock's price actions based on time and price, on the time and price. Okay, technical analysis is basically the prediction of the future movements of the stocks, and it is based on the past performance of the stocks. Okay, future, past, and present, all they will calculate it, and they will indicates. Okay, there are many types of charts that are used for technical analysis. However, the four types of uh, types that are most common. Okay, there is so many types of stocks charts, but there is a especially, okay, in the world the four types of chart is is line chart, bar chart, point and figure chart, and candlestick chart. But my favorite candlestick chart, stock chart, is a candlestick chart. So today I'm going to talk about the candlestick chart. Okay, if you understand about candlestick chart, that means you can trade in your uh, okay, you can trade easily, you can understand more better about the market price. Okay, so candlestick chart. What is candlestick chart? A candlestick chart, also called Japanese candlestick chart, is a style of financial chart used to describe a price movements of stocks. In bullish candlestick, opening price will be down and closing price will be up. And in bearish candlestick, opening price will be up and closing price will be down. Okay, in candlestick, there are two candlestick, one bearish, one bullish. Okay, bullish is a green, bearish is a red. Bullish is a bull, bearish is a bear. Okay, and always understand that. Okay, so let's talk about bullish candlestick, green or white. Okay, the signal is green or white. Sometimes some people like to use white, some but maximum people, majority of people use to green. Okay, a bullish candle shows that the price has increased over the time period. Bullish candlesticks indicate uptrend. Okay, bullish means a buyer. If the buyer increase, that means there is, it shows a lot of bullish candlestick. Okay, bullish candle, green candle. Okay, and remember always there are what is it called, there are opening price will be down and closing price will be up. Okay, again, and there is a wick body and upper wick, lower wick body, and it will be a candlestick. Okay, and let's talk about a bearish candlestick. A bearish candlestick shows that the price has decreased over the time period. In bearish candlestick pattern, opening price will be up and closing price will be down. It indicates downtrend. Okay, when the sellers increase, that means the bear candlestick will increase and it will be a downtrend. And another thing you have to understand about pattern. Okay, bullish engulfing pattern and bearish engulfing pattern. Okay, so I would like to share you guys what is a bullish engulfing pattern. Right, bullish engulfing pattern is a bullish engulfing pattern is a candlestick pattern. Okay, try to understand that. A bullish engulfing pattern is a candlestick pattern that focus when a small bearish candlestick is followed the next day by a large bullish candlestick. The body of bearish candlestick is completely overlaps or engulfs by the bullish candlestick. Okay. First, there is a bearish small candlestick, and that candlestick is totally covered by the next one is the very bullish candlestick, totally covered by the bullish candlestick. Means that's called a bullish engulfing pattern. And bullish engulfing pattern, okay, always covered by the, if you see a bullish engulfing pattern, that means the buyer is in momentum. Okay, the buyers are taking the market. Okay, in example, okay, some, so I will give you some important indicators. Okay, bullish reversal pattern uptrend. Okay, bullish engulfing pattern always uptrend. Buyers are moment momentarily in control. The larger it is, the more significant. Okay, the larger, the more significant. 5 minutes time frame is good in intraday. 5 minutes time frame is good for the day traders. Okay, don't trade it in isolation. Okay, don't trade by only using the bullish engulfing pattern. You have to understand the trend, you have to understand the volume, everything. You have to understand that. Okay, so that's the bullish engulfing pattern. Okay, so next let's go to the bearish engulfing pattern. First of all, you have to understand that bearish engulfing pattern is a technical chart pattern that signals lower price to come. Okay, a bearish engulfing pattern is a candlestick pattern that forms when a small bullish candlestick is followed the next day by a large bearish candlestick, which completely overlaps or covered. Okay, when the bullish engulfing pattern, there was the bearish candlestick is completely covered by bullish candlestick. Okay, here what will be bullish candlestick is completely covered by the bearish candlestick. That is called a bearish engulfing pattern. Okay, so important indications: bearish reversal pattern downtrend. Sellers are momentarily in control. The large it is, the more significant. Don't trade it's also isolated. Okay, guys. So next one, in a candlestick chart, you have to understand about tweezer top and a candlestick pattern. Okay, tweezer top candlestick pattern. What is a tweezer top candlestick pattern? The tweezer top is a two candle bearish reversal pattern that occurs after an uptrend. Okay, always remember, when the market is in uptrend and then the tweezer top candlestick will appear, that means after that the market trend will change. The market trend is going to going up advance. Okay, so you have to understand the tweezer top candlestick pattern as well. Okay, and in tweezer top always highs must be equal. Okay, tweezer top pattern indicators bearish reversal. Okay, if you see the tweezer top candlestick patterns, that means be aware, because the up, so you have to be clarify, you have to be smart, you have to be master in tweezer top candlestick pattern as well. Okay, and tweezer bottom candlestick pattern. Okay, I just showing this all chart, because all patterns, because you have to understand. Okay, you have to look, you have to research, and you have to study. Okay, if you don't know, if you didn't find it the best course, then please leave me the message, leave me the comment, so I will make the another video for you one by one in a very simple way, very completely clearly. Okay, so tweezer bottom candlestick pattern. A tweezer bottom is a bullish reversal pattern seen at the bottom of the downtrend and consists of two Japanese candlesticks with a matching bottoms. The matching bottoms are usually composed of shadow, but can be of candle bodies as well. Okay, so tweezer bottom candlestick always it forms when the market is in bottom candlestick pattern. That means market is going to reverse. Okay, it's going to uptrend now. You have to understand that it's going to uptrend. So at that time you can buy. That the time you have to in. Okay, that the time entry point. Okay, tweezer bottom candlestick. Okay, and how you can identify a tweezer bottom? Look for the following criteria. There must be two or more consecutive candles of either colors. A clear downtrend should be present. Both candles must reach the same low points. Okay, so that's the tweezer bottom candlestick pattern. So next one, very important one, is a hammer candlestick pattern. Okay, when you see the hammer candlestick stick pattern, that means you have to be, ready, caution, extra caution. Okay, so what is the candlestick pattern? A hammer is a price pattern in a candlestick charting that occurs when a security trends significantly lower than its opening. It is also looks like hammer. Hammer. It looks like a hammer. Okay, hammer have a small body and a long lower shadow, long lower wick, small body and long lower wick. Okay, hammer occurs a price decline. Hammer consists shows seller come in the market during the market. Okay, and when you see hammer candlestick, bullish or bearish doesn't matter, signals after the market. Okay, when the market is downtrend, and if you see the hammer, candlestick pattern. Bullish or bearish doesn't matter. If you see the hammer, that means now the market will be uptrend. Okay, so understand that hammer always. If you see hammer, you have to be extra caution. Be prepared to buy. Okay, but don't trade isolated. Hammer side is a shooting star candlestick pattern. If you see the hammer, that means bullish, the market will be uptrend. But if you see shooting star candlestick pattern, that means market is going downtrend. Okay, you have to sell that time. Okay, but again, don't trade isolation. Okay, isolated. Okay, so another one is a Maruboja candlestick. Okay, this is also very important. You have to understand about the Maruboja as well. Okay, and reversal and continuation, you have to understand that as well. And another one, because I'm going to in shortcut way. Okay, if you need more, and then comment, leave the comment, then I will make the complete video. You have to understand types of doji as well. Okay, and you have to understand about gravestone doji. You have to understand about morning star candlestick pattern and evening star candlestick pattern as well. Okay, and bullish harami pattern, bearish harami pattern. Okay, and support and resistance, you have to understand that one. Okay, if you didn't find any course, please leave me the message and I will make the completely easy, understandable, and very very simple video for you. And please don't forget to subscribe my video, then if I make the new video, you will get the notification. Okay, because your small subscriber, small likes help me to improve my next video. Okay, thank you very much everyone, have a great day, bye.